Hello and good morning, listeners. This is Almus Market Mornings with Shikhar Garg, and we are almost at the end of our festive week, awaiting some key events this Friday. And yes, folks, this Friday would definitely have some action as it's the last meeting for the outgoing Governor Kuroda for the Bank of Japan, and investors are keeping themselves alert for any parting shot by the governor. Also, we have the US jobs report being released tomorrow. The payroll numbers, along with the wages and the unemployment data, will give us further cues on the rate hike. Quantum, I should say, rather, as the further hike is anyways expected, but the question is by how much. A better than expected results can push for a higher quantum, though less likely for the timing. So, yeah, I'd like your views on this front, as it's going to be a key directional expectations the market would be setting, as well as what's going on in USD INR as it shot up once again yesterday. But it looks like in the off market as it's down again. So, what's your take?
Good morning. Yeah, actually, if you look at the USD INR, it has not really weakened that much compared to other dollar pairs. We saw a rally in the USD INR by about 40 paisa from previous day close, but recovered most of it once again down to some flows, as well as exporters increasing their hedges in view of the year end. In fact, we can see that INR has kind of outperformed in the last few days. Even if you look at some of the Asian peers, they had weekend yesterday after Powell's statement, particularly in the Korean won, Malaysian ringgit, and or even the Indonesian rupiah, which is generally stronger. And Chinese yuan, of course, is steadily moving towards 6.9899. I mean, rather closer to 7 on the dollar. So you can say that rupee is definitely performing better on the relative basis, and also the seasonal factors are playing out. Or also, if you look at the Indian equity market, they have been holding up extremely well. So, of course, we will take further cues from the upcoming inflation data on coming Monday, as well as the trade numbers, which will be published on 15th. Till then, I think 81.70 levels should hold, and upside would be 82.30, which is now becoming a very strong resistance. So we will be in a range trade for a couple of days, then take on after the US non-farm payrolls and onwards. But yesterday was, again, markets started, with nervousness after Powell's testimony on Tuesday. But again, there was another testimony on Wednesday to the House Financial Services Committee, where he said that it's very possible interest rates would spike further, but he reiterated that no decision has been made on the quantum of interest rates, and he will definitely be looking at what the upcoming economic data suggests. So this is what he tried to convey, because market started to get nervous about 0.5% increase has been priced in, kind of has been decided. That kind of market reaction was seen on the previous day. So that's why he tried to give some relief, but he also spoke about the debt issue has to be resolved. That's one more thing that he's on, and there is no magic wand that the Fed holds if there were to be any failure of debt talks. And finally, he also reiterated that the dollar will remain as the leading currency due to US democratic institutions, liquid markets, and the rule of law, and the fact that dollar has its value over a period of time. So nothing earth-shaking from Powell in yesterday's testimony, but the sense that I am getting from both the days is that Fed's moves will be data dependent. And we had a lot of data yesterday also, particularly on the jobs market. The private payrolls increased by 242,000 versus estimate of 205,000 in the last month, so 119,000. So that was another good number on the jobs. But on the JOLTS report, there was some mixed kind of feeling that, while the job openings were at 10.8 million versus 10.5 million expected, but it was lower than previous month. Hiring increased to 6.37 from 6.25 million. That was a good thing, but the layoffs surged to 1.72 million from 1.8 million. Quits rate also dropped, which means people were looking to hold on to their jobs. So a kind of mixed report. And also we'll have another report on the jobs, that is the challenger layoffs, which is something which should, in fact, everything related to employment is being looked at by analysts very closely. And challenger layoffs have been increasing in the last few months. That is some slight, indication that job market may be starting to cool off a bit, but really we need very good, stronger evidence for to conclude that my economy is cooling. As of now, we still have 1.9 jobs available for each unemployed person in the US. We also had some tepid data from Eurozone. GDP growth revised down to flat from 0.1% for the fourth quarter. And maximum impact was coming from poor household consumption and investment data, showing that underlying developments are weaker than expected, adding concerns about the Eurozone economic performance. And both of them have been affected by rising interest rates as well. Germany's retail sales dropped by 0.2% month on month, and versus 2% that was expected. And on an annualized basis, it slumped another 6.9% versus 6.1% drop that was expected. It looks like Eurozone is started to feel the heat of higher interest rates, and if the economy starts to underperform further, I think with inflation ruling high and policy rates expected to go up by at least 100 basis points, the stagflation prospects for the Eurozone are increasing, and definitely it is kind of reflected in the Euro exchange rate as well. It was another central bank decision yesterday from Bank of Canada, who held the rate steady, and they made it clear that they may be prepared to raise rates further depending on how inflation economy progresses. This was, paused by them after 8 consecutive increases, and the rates had gone up by 4.25%. But definitely, their further statements indicate that they are seeing the economy steadying, inflation also slowly moving towards their target. So if you look at the fact that even Australian Central Bank, while hiking 0.25, indicated that they may be in for a possible pause in the coming month, depending on how economy performs. So if you look at Eurozone, Australia, and Canada, all of them are somewhat moving towards, some economic strain from the higher interest rates. Eurozone interest rates will still go up. Canada paused, and Australia possibly on the way to pass. All these things together means that, some central banks are already seeing the rates perhaps not to go too high from here. US, of course, stands apart right now, but with yield curve steepness on the 2 over 10 year reaching 111 yesterday, I think it's only a matter of time before I think we see a big economic impact of higher interest rates on the US as well. But right now, market is looking at the relative growth prospects of US or the growth picture of US, and that's helping the dollar and the yields remain high. While dollar did not make a new high yesterday, it stays on the firmer side, and we need more clues from the upcoming data. Today, jobless claims, tomorrow non-farm payrolls, and then the inflation numbers on Tuesday. All these things will be very closely watched for how the dollar performs, but bias slightly remains towards dollar strength. If you look at Fed funds pricing in the market, it's March hike of 0.5% is now 71% priced. So that's probability rather. The terminal right now is at 5.69% from 5.62% on the previous day. So that's the overall picture. uh, we are after moving big time on the stocks, bonds, and the yields as well as currencies in the earlier part of the week. Now we await for more clues, and two interesting points I observed from a report in Reuters that India's yield curve between 1 year and 10 year inverted for the very first time after Reserve Bank sold 364-day notes at 7.48. The yield on 1 year hit 7.4750, while 10 year was trading at 7.47. It's a very, very marginal thing, but the very fact that 1 year and 10 year are dealing so close is something very interesting we need to observe. Is it because of more demand for longer term paper, or is it because economy is headed for a slowdown? This is something that will be assisted going forward. One more positive news for EM watchers: the Sri Lankan rupee has strengthened almost 16% from its weakest level that was seen last year, and this was after it had weakened 80%, more than 80% in the latest cycle, and this was after China debt talks for funding the Sri Lankan economy proving to be positive. Just a small bit of news on the EM side. So overall, something market well, a lot to chew for the market in the coming days, and holding its breath until we get the key data. Thank you.
Okay, JK, that's quite interesting. And yes, folks, the yield curves are telling us something, and the way yields are acting, it is only a matter of time that we'll see some bit of heat on the US economy as well, as the inversion has been quite high beyond 100 basis points. But what is interesting to watch is also the desynchronization of the central banks across. I mean, earlier all the central banks were in sync when it comes to when it was about rate hikes, but recently the pausing by Bank of Canada and the hints of pausing by Bank of Australia are showing the desynchronous nature amongst the central banks against the inflation. But as JK mentioned, it's the tepid data from the Eurozone which is giving signs of the heat felt by the Eurozone of the higher interest rates. What also needs to be seen is the kind of data that we get from the US on the jobs front, as its earlier indications have been a big bag of mixed numbers for the jobs. And this has put markets on the jittery side as to the quantum of rate hikes that we are going to see. On the domestic front, the USD INR currency pair is likely to remain in a range as JK mentioned, and not much action should be expected in the coming 2 days as the markets await a whole host of data points on Friday as well as on Tuesday about the inflation numbers. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening.